Thank you, Melissa. My name is Rhonda Collier, and I am the Grants Management Officer for the Office of Child Support Services Program. I am delighted to be here with you all today. And as Melissa said earlier, thank you all for joining us today to be a part of this overview. I will be sharing my screen here in just a little bit, where I have a PowerPoint presentation that I would like to walk through. Today, I will be going over the Notice of Grant Award, the terms and conditions, as well as the computation of the award. So I'm going to share my screen. Try this again. Okay, can you see my screen?
Not yet. We do not.
You don't see it yet. Try it again.
There, it's loaded. Now we do.
Okay, loaded. Okay, perfect. So I'm going to begin again. So my name is Rhonda Collier, and I am presenting on an overview of the Notice of Grant Awards on today. So today, this is our agenda. We're going to go over the Notice of the Grant Award, which we also use the acronym, the NOA. We're going to go over the terms and conditions, the computation of the grant award. So those are the three things that we'll be going over today. So this first screen you see is the Notice of Award. So the Notice of Award is a legal document, and it notifies the recipient, the state, that the federal award has been issued, it's been made. And upon the receipt of this Notice of Award, the recipient can now request funds from the Payment Management System, which we also call PMS. So there are essential information on this Notice of Award, or NOA, that I want to go through. Some information is self-explanatory that is on this award. You have the recipients, the name and address, the employee identification number, and you have the DUNS number listed. And I'm going down the recipient information column here on the left-hand side. As you can see right here, you have the employee identification number, the DUNS number, and then we also have what we call the UEI number. So the UEI is the unique entity identifier. So an active UEI is required for an ACF, to issue a grant award. So a recipient has to make sure that they have an active UEI. Recipients must renew their UEIs annually, and those are renewed at sam.gov. Failure to renew those UEIs prior to expiration, it could cause a delay in awarding. So it's very important and imperative that the recipients keep their UEIs active. The next information on here is the project director or principal investigator. And I wanted to just point that information out because this information is populated through our grant solution system, through the MGM, which is the mandatory grants module. So if this information on the award is not correct, we would need to be notified, and we can go into the grantee's profile and update the information that is listed here under the project director or principal investigator. I want to bring your attention to the top of this NOA, where it says Notice of Award. You have the award number and you have the FAIN number. FAIN is an acronym for Federal Award Identification Number. Both of these numbers are the same, and these numbers are assigned to the federal award or grant, and it's just a reference number that helps both the agency as well as the recipient track and manage the award throughout its life cycle. When we get down to the computation of award, I will bring out the grant document number. That is the number that the recipient will utilize to access or track the funds in the payment management system. So the Notice of Award is what is used to just track the award. But when it comes to PMS, you will utilize the grant document number, which we will talk about further when we get to the grant computation. The next thing I want to bring out here on this slide is the summary of federal award financial information. So here you see number 19, it says the amount of federal funds obligated by this action. So in this box is telling you the amount of monies that is awarded in this award. And it's also giving you that federal award identification number, which is also the same as the award number. So it's giving you that information here. So now I want you to pay attention to where it says the fiscal quarter start date. It says January 1st. This example says January 1st of 2024. So what this is letting us know the information, it's informing the grantee that the funds that are awarded in this action cannot be drawn down prior to the date of this fiscal quarter start date. So that's what the that's what this date is for. The end date is 3/31/2004. So although funds cannot be drawn down prior to this, any unused award authority can be transferred to and used for subsequent quarters. But this date is just to let the recipient know that funds according to this action cannot be drawn prior to this fiscal quarter start date. The next page is the second page that will be part of your notice of award, which gives you the general terms and conditions. It also gives you the link where you can find these general terms and conditions. The general terms and conditions. So acceptance of the Title 4D grant award, we know you're saying that you're going to agree to comply with federal government terms and conditions of this award. Failure to not comply can result in the loss of federal funds. So the general terms and conditions goes through the applicable legislation, cost sharing and match, financial reporting, program reporting, real property, tangible personal property, grant payments, as we go on and on here, effective period, points of contact. But I want to discuss in further detail the OCSS specific terms and conditions. And it has the same acceptance of these 4D funds. Award serves as an agreement to comply with our federal government terms and conditions. Failure to comply will result in loss of federal funding. So when it comes to applicable legislation, statute, and regulations, so this program is authorized as under Part D of the Title 4 of the Social Security Act. So that is the applicable legislation that allows us to operate this program. This program utilizes the Uniform Administration Requirements, Cost Principles, and Audit Requirements. It's located under 45 CFR Part 75. When it comes to cost sharing and matching, the federal participation rate is 66% for allowable legitimate program costs. The state is required to provide a 34% program funding. And the state share of funding may include funds appropriated by the state legislated or donated funds. But third-party in-kind contributions may not be used as non-federal share or program expenditures. So the FFP is 66% with a 34% share of the program. The program share is 34%. So we're going to talk about now submission schedules. So this report, the reporting for the awarding from this program comes from the 396. And the 396 report is reported by the state quarterly. So each quarterly report must be submitted within 45 days of the end of each fiscal quarter. So for example, no later than February the 15th, May 15th, August 15th, and November 15th. Those are the latest dates that the 396 reports can be submitted. And we have broken down into 4 quarters. First quarter ends December 31st. Second quarter ends March the 30th. Third quarter, June 30th. And the fourth quarter ends September 30th. So now when we get here to the cost allocation. So operating in this program is subject to the public assistance cost allocation, which we call the PA cap. So a state must include all state agency costs that are applicable to this program in their cost allocation plan and amendment submissions. And after a cost allocation has been approved, then a state can then claim FFP costs that's associated with a program only. A state may claim FFP costs associated with program only in accordance with an approved cost allocation plan. So the FFP cannot be claimed until the state has an approved cost allocation plan. Okay. So when it comes to real property forms are not applicable to this program because purchase, construction, and renovation are not allowed with this program. So that form F, I think it's SF 429 is not applicable to this program. Now, when it comes to tangible personal property forms must be submitted. Recipients and sub-recipients that purchase any tangible personal property or equipment with a unit cost of $5,000 or more, or residual supplies with a collective fair market value exceeding $5,000 under the award are required to submit the SF 428, which is the tangible property reporting form. Now, before I go into the computation of award, I wanted to just give this screenshot right here. This is giving us an awarding timeline. So I'm going to just go and break this down. So on this left-hand column, you have the dates. And then subsequent to the right of that, it's showing you on those dates what the recipient will be awarded. So October 1st of 2023, the recipient received their Q1 estimates. And so on January 1st, they received Q2 estimates. April 1st, you will get Q3 estimates, and then this is when the reconciliation of Q1 begins. And what I mean by reconciliation, you receive your Q1 estimates October 1st. So the recipient previously estimated the amount of dollars they felt were needed for this quarter to handle this quarter of expenditures. So in April, this is when the reconciliation begins. So the actual expenditures are in, and then we look at what you were awarded as an estimate. And then that's when we begin to calculate whether you overestimated or underestimated, and your grant award will reflect that. The same thing in July. July, you will get your Q4 estimates, but there will also now begin the reconciliation of here. January, you were awarded your Q2 estimates. July, now we're going to reconcile what you actually reported as actual expenditures and what you requested or was issued to you as estimates. Then we have right here, September 30th, our funding period ends. So beginning like October 1st of the next year, like October 1st of 24, Q3 reconciliation is going on as well as getting the Q1 estimates for 25. You were awarded your Q3 estimates here on April 1st, 2024. That reconciliation of actuals and estimates does not happen until October of the following fiscal year. And so on. January 1st of 25, you will get the Q4 expenditures. It will be the reconciliation of what you were awarded in July as estimates of what's actually being reported here in January 2025, which brings us to our computation of awards. So notice is what I said here. This July is when the estimates for Q4 were done. The 1st is when the reconciliation happens. So this is how this award will look. This is the computation of award. As you can see, this is January, the date it was issued, as we stated on this previous slide, right here, January. So now we're looking at the Q4. This is Q4, July 1st, 2023 is an example, to September 30th, 2003. That is Q4. So now the actual expenditures have been reported. So as we can see here, the current quarter claims was the $9.1 million. And then there was development costs also reported on that 396, which gives a total current quarter claim of the $12.2 million. Then as we can see on the next line, item line B, on actual expenditures reported, there was a prior quarter adjustment. And we can see, because this is a positive number, this was an increasing adjustment. which means it will increase the amount of this award. If this was a decreasing adjustment for a prior quarter, then this would have brackets around it. This would be a negative number, and that would decrease the amount of the issuance of this award. But as we can see, this prior quarter adjustment on this example here was an increasing adjustment. So it increases the award. And there was also an increasing adjustment when it comes to development. So the total prior quarter adjustment is 15 million, and it's increasing. So it will add to this award. Then as we go down here to line E, where it says fees and collections, there was $1.1 million reported as actual fees and collections. So this amount will reduce the amount of this action. So the total net claim will be our 12.2 million of current quarter claims, our prior quarter adjustments of the 15 million, minus the 1.1 that was reported as fees and collections, giving us a total net claim of 26.1 million. So these are the amounts that the recipient reported as actual expenditures. But as I explained in the previous slide, the estimates are issued to the recipient before the actual expenditures come in. So now this is the bottom portion of this award here. So it's also for the period of July 1st through September 30th. But as you can see above that, it says funds advanced to the grantee. So these were the estimates that were issued to the grantee. And as we can see here, the estimates was 9.5, but the actuals were 11.1. So that's letting me know that the recipient underestimated what they would need. Incentives were issued as an estimate at 1.2, so no incentives were reported on actuals. Development costs. The state or recipient was issued 10 million as an estimate. Actual development expenditure cost that was actually reported was 14.9 million. So that's letting me know that the state also underestimated here. For a total of 20.8 million. So they were issued 20.8 million in estimates, but actual expenditures were a little bit more, 26.1 million, which brings us down to the total certified for this grant award, which is the 6.5 million. So I'll stop right there. Are there any questions on the computation of award?
Please feel free if you would like to add any questions into the chat, raise your hands or come on mute.
Okay, so I will keep going. So now when I spoke earlier, I'll try to go back to the previous slide, go back. I talked about the award number. The award number and this identifier number here is being the same number, and that's the way of the agency and the recipient tracking anything dealing with this award. When you go into payment management system, PMS, you want to make sure you see the identifying number is on here as well as a grant document number. The grant document number and this identifier number sometimes are the same, but sometimes they are not. So you want to make sure when you're going into PMS to track to make sure that the monies that are on this award have actually hit your PMS account. You want to utilize the grant document number. This is the number that is utilized in PMS that tracks your drawdowns and deposits into the payment management system. Are there any questions? Is there anything that was not covered that anyone has questions on?
Hi, Rhonda. We do have a question in the chat. What is the estimated award based on?
Okay, the estimated award is based on the recipient. They look at maybe trends of previous amounts that have been utilized for that quarter. And then they put in the estimates. Most grantees or recipients will increase whatever they previously were awarded or estimated by a percentage. I've seen where some recipients will increase their estimates by 3.5 based on what they estimated last year for that quarter, or a solid 5%.
Does that come from the 396 report?
Yes, that comes from the 396 report. And I expand a little bit more on that with the estimates. So each quarter, when the state submits their actual expenditures, they also are requesting estimates. So for quarter one, which ends December 31st, when the recipient submits their actual expenditures, they're also submitting their estimates that they feel like they would need for quarter three. Quarter two, that ends March the 30th, the recipient submits their actual expenditures that occur between January 1st and March 30th, as well as their estimated needs for quarter four, which is July through September. Then in quarter three, which is April 1st through June 30th, when they submit their actual expenditures, they're also submitting their estimated needs for quarter one. And then for the fourth quarter, which is July 1st through September 30th, when they're entering those actual expenditures, they're also submitting estimates that will be needed for quarter two.
Thank you, Rhonda. I'm showing on the screen for everyone your OCFE 396 report. So you can see you have columns A and B that have your current quarter claims. C and D are your prior quarter adjustments, and E and F are your next quarter estimates. And that was what Rhonda was speaking to, that you have your estimates on here at the same time you're fine with your quarter claim.
Thank you, Melissa.
We have another question, Rhonda, that's come in through the chat. They
Okay,
asked, would the 6.5 million be an additional award amount? So maybe if you could pull up that computation slide again, so we can see that 6.5 million. And the question is if that's an additional award amount.
okay, so let me pull it back up. Let me share my screen. Okay, can you see my screen?
Yes, we can. Thank you.
Okay, so yes, the 6.5 will be an additional because it was an underestimate of what was actually needed for that period. Now, if there was an overestimate, this will be a negative award. This award would be negative. So there's always a reconciliation going on of what was previously awarded as an estimate and what was actual. It's almost like keeping check and balances of a checkbook is how I think of it in my head to make it make sense. So I think about maybe you apply for something and you charge it with your credit card, and then and the bill actually comes in and you pay the bill. So I see this as like a check and balance. It's of like a constant reconciliation of what you thought you would spend and what you actually spend. Any other questions?
Yes, we have one other question in the chat.
Okay.
In the program incentive column, so maybe you want to pull that back up. Maybe we'll just leave that on the screen for a little bit, Ron. It's got a lot of questions. In the program incentive column, why isn't the 1.25 million in the total?
It actually is. And that's one thing about this award. I'll try to do the calculations first so you can see. Well, it's not moving. Okay. I'll do some calculations on the screen. So if you take this 26.1 and then you subtract the 2814,864.
Rhonda, you had 56 rather than 26.
Did I get it
so
wrong?
That's why your numbers, your numbers aren't going to line up.
I moved my keyboard to try to, okay. So it's 26,112,751. And then we subtract what they were advanced. And the difference is the 1.2. So the award they're getting is not going to be this 5.2, but let me add that 1.2 in there. That's the amount. So it actually is, but the way the award is displayed, you would think that it was included. Yeah, I don't know how they do that. But it's in there, as you can see from the calculation, but it can be confusing. But when
Yeah,
you
the
do the
comment
numbers,
was
if you
that
take,
they agree it, yeah, the comment was they agree it's in the total across, but it doesn't show when going down.
when it goes down
So
here,
like, I think they're looking at line 4 for expenditure awards, this action.
oh, why it
And
doesn't come down? I'm not sure why that it's not coming down here in the expender award at this action, and that could be something we need to maybe get with this will, I guess maybe something we can look at, but
I,
that amount is included in the total, but they could be confusing because it looks like it's not brought down.
and it might be that the incentive awards are different than an expenditure award.
That
That
could
might
be.
be why it didn't
I can
total
find
down.
out. Yeah, it's included in a total, but it's not, for some reason that number is not brought down as the other columns are. I do see that. But that's something I can look into.
So the next question, Rhonda, is if the total expenditure award this action is a negative amount, how is that handled? Is it taken off the next quarter's award?
So what it does, yes, it reduces the action. It reduces the amount of the next quarter because you were overpaid. So you will, whatever you were getting for the next quarter, it will be reduced by the amount that was over issued to you for estimates. And so it's a constant reconciliation.
Okay, questions are coming in fast and furious now, Rhonda. Next one is, what is the percent of allowable variance for the estimate?
What is the percent for the allowable variance for estimates? I'm going to ask, I'm not sure. Let me see. I believe Julie is on her. She may know that. That may be something I have to get back with you on. I'm running that down.
Hey Ron, that's Julie. I think we should take that as an action to respond to that in the other question.
Okay,
Thanks.
thank you.
We'll try to include that when we send out the recording and the slides to answer those two
Okay.
questions.
Next question.
I'm scrolling through the chat. I think we may have gotten everything at this point. Are there any other questions?
Okay, with no other questions, I'll leave my information here. Again, that's my name, Rhonda Collier, the Grants Management Officer, and this information will also be included in the slides as well. So if there are any further questions, if you can just let Melissa know, and I can make sure we get those responded, get a response to you for those questions.
And before everyone signs off, we do have another question that's come in.
Okay.
Has a recipient ever overspent their award?
So when you say overspent, you mean actually receive more money than they were awarded?
Yes, I know that you have a reconciliation throughout each of the quarters. And they submit an estimate each time. But
Right.
has there ever been an occurrence where perhaps somehow they spent more than they were awarded, even though the estimates are being submitted? Perhaps not.
Well, because the estimates and the actuals, as you can see on the slide I show, are so far apart. With this reconciliation, there's always, when we notice, when the system automatically catches that when there's a issuance of estimates that was the expenditures were less than or over the estimates. When the estimates that we gave were more than the actual expenditures, it will automatically reduce the next award.
Okay, that makes sense. Thanks.
You're welcome.
And so I do have one question. Julie was wondering, is there any other trainings or information you would like to see brought to you with our Office of Grants Management or OCSS? If so, feel free to throw those items into the chat and we'll work on those for the next time. So I do have another question in the chat asking what happens to the money that does not get spent.
The money that does not get spent from each award, that money can be carried over to subsequent awards to be drawn down. There is I have to get that date though. There is a certain time that those funds have to be obligated, but I want to make sure I'm giving you the right information. So I'm writing it that as a question to follow up with as well.
All right.
But there is a de-obligation period, but I want to make sure I'm giving you the right dates and how long you have before that money is de-obligated. So I just want to make sure I have the dates and time frame correct.
All right, everyone. The questions seem to have come to a stop. We thank you and appreciate you joining us today. As I mentioned, we shared the information for this meeting through both the Office of Grants Management's listserv and also OCS listserv out to tribal or to state directors. So we will do the same as we share out the slides, the recording, and also the answer to the 3 questions that Rhonda has jotted down for follow-up. So look for that in the coming weeks. We appreciate you taking the time for joining us. And Rhonda, thank you so much for joining and leading this discussion today.
Thank you for the invitation, Melissa. I appreciate it.
All right, take care, everyone. Thank you.
Bye-bye.